Hi! In this video, I want to show you a position I opened last week, where the first adjustment has already taken place. Here's a screenshot of the trade. It happened on the 20th. It was during this red candle, but I took a screenshot of the situation at that time. This is how it looked on the 20th at 8:23 p.m. And this is the beautiful diagonal spread that NinjaSpread has found for me. I found it with the help of an alert. I wasn't specifically looking for a position on Meta using NinjaSpread. I simply liked the volatility skew and the entire risk graph before the earnings report so much that I couldn't resist. Currently, you can see I bought it for 25 cents, and I've already sold a quarter of it for 60 cents. Here's the screenshot of the recent execution. So this was on the 20th, and this is on the 25th. So far, I've only scaled out of a quarter of the position. I didn't close half of the position because I was curious about what could be made of it. So now I sold a quarter of it. And I'm curious how much it can appreciate. There is a risk here because the earnings report will be tomorrow evening, after the market closes, so it's likely that I should close it tomorrow. The question is how far we will go up by then. Of course, if someone likes risk in such a trade, they could sit through the earnings. But if it has already produced a nice return, maybe it's not necessary. Lately, there have been some surprises in earnings reports like Snapchat. It's certain that this risk graph will sink. So this whole risk graph will collapse after the announcement. Now it looks so good because there is almost a 70-point wide implied volatility difference between the short and long legs. This will obviously drop, so the whole thing will shrink and sink. So this $2,500 theoretical profit is completely unrealistic, it's unattainable. We can know that for sure. So the real question is whether I want to hold on to it, say we go to 150 or go back to 120. But if we go back to 120, it will definitely be a losing trade. Tomorrow I'll see how much I can scale out for, and just for fun, keep one contract. We'll see, so I'll continue tomorrow. Alright, once again it's the 26th today, and the earnings report is coming out after market. I want to show you something interesting here. Yesterday when I recorded the video, we saw about a 60-point difference between the two implied volatilities. So, the skew was 60 points. Now it has increased to 90 points. And yesterday we saw $210 theta. You can look back at the previous day, it was around $210, $220 theta. Now yesterday the last recording showed a $147 profit, and currently it's at $133 profit. So essentially yesterday's $200 theta was an illusion, as we know. It's important to understand that the theta numbers we see here are relatively theoretical, especially before earnings reports, and when the volatility skew widens in a time spread. In this case, we've widened, so the volatility of the leg I'm shorting has increased, while it remained practically constant in the one I'm long in. So yesterday, it was around 106, and today it's also 106. This leg was 168 yesterday, and now it's 198. So it grew by 30 points against me, and the position went against me theta-wise. I closed this yesterday at 60 cents, it was 62 cents. Today it's at 58 cents, and it was only 50 cents earlier in the day. So I was waiting and waiting, hoping to sell it at the same price. What I need to do now is enter an order for 60 cents, and I'll close out half of the position, 2 quarters, at around 60 cents, hopefully. I'll leave the rest just for fun to see what happens. So now, I'm going to go do that, and I'll be back soon. So I managed to close the position as planned at 58 cents. Here's the screenshot of the execution. I left a quarter of the position open for tomorrow. I'm curious where we're going. It's possible that it might drop, and then the profit would be only $1.76, but it could also stay around the 135, 140 area, and then more profit could be harvested from it. So basically, we can say that it's almost risk-free, although there's still some risk if it continues higher. But I think the chance of it being around 180 tomorrow is quite low. After Google, Microsoft, and Snapchat all reported worse than expected results, and with many tech sector stocks also performing poorly, I don't think there's a huge risk of an upward bounce, but you never say never, especially in this market, so who knows. That's why I left some of the position open, as it's quite far from being dangerous, but there might be a chance to harvest more profit from it, we'll see. I'll continue from here. Well, here we are again. Today is the 27th, and this meta position isn't looking too good. In fact, it's down by 22%, So I managed to sell the last quarter for about 4 cents, which was obviously a bad decision to wait. But that's how it is. Honestly, I didn't expect this 22% drop. After hours, it went down by about 18%, which is really rough. The issue with the meta here is that, based on the numbers, it's not just a sentiment-driven thing, but the fundamentals have actually deteriorated. So this is interesting in the long run. Going down from 384 to 97 is almost more brutal than Alibaba. It's a very tough situation. If we look at this on a weekly basis, it's incredibly brutal. They really hammered the stock price. Anyway, it is what it is. So this position closed with a minimal profit of $80, which isn't that bad when projected onto $100 initial risk. That's all about this. If you have any questions, thank you for your attention. Bye.